Big money, big ideas, and maybe, just maybe, a very big problem. Today, we're diving into what happens when charity gets, well, complicated. This is all about the charity loophole.
So it all kind of kicked off with this announcement from Mark Zuckerberg and Priscilla Chan. Their massive foundation was going all in on AI-powered biology. That one single pivot, it's the perfect entry point into a story that is so much bigger. Critics were really quick to connect the dots here. I mean, you have a guy who has publicly talked about extending human life, and now he's using his tax-deductible foundation to fund the very research that could do just that. It just begs the question, right? Is this for the public good, or is it for personal gain?
Now, you might be sitting there thinking, hey, it's his money. He can do what he wants. And look, that's a fair point. But what if this isn't just one billionaire's little pet project? What if it's a symptom of a much bigger shift in how the entire system of charity works? Because as we're about to see, this goes a whole lot deeper. All right, so let's start with the first huge issue here, a massive concentration of power. We're talking about a handful of ultra-wealthy donors who have basically become the new gatekeepers of all charitable giving. Okay, so this slide is really where it gets wild. Just look at the data, look at this shift. If you go back to 1993, regular folks, households making under $200K a year, they were the backbone of charity. They made up 77% of all donations. The wealthiest? Just 10%. But fast forward to 2019, and the whole thing is completely flipped on its head. Regular households are down to 33%, while the super rich now make up over 40%. What that means is charities have become dangerously dependent on a tiny group of people. And that dependency, it isn't just a number on a chart. It has real, direct human consequences when the whims of those few donors suddenly change.
400. Right now, it's just a number on the screen. But what does it actually represent? It represents a promise that was completely broken. 400 is the number of underprivileged students in Palo Alto. They had a school funded entirely by the Chan Zuckerberg Initiative. And then, when the foundation decided to pivot to AI research, the school shut down. Just like that, almost overnight. The funding just disappeared. It's such a clear and kind of brutal example of how fragile things become when they rely on the changing priorities of just one donor. So we've got this concentration of power. But what happens when that power isn't just used to fund projects, but to actively push a specific agenda? Well, that brings us to the next layer of this whole problem, giving with an agenda.
And we see this playing out in a few key ways. You've got donors like the Waltons who pump money into policy debates to push for charter schools. You've got millions of tax-deductible dollars flowing into ideological think tanks on both sides of the aisle, think the Heritage Foundation or the Brookings Institute, that are literally shaping the laws we all live by. Then there's the huge amount of money that goes to cultural institutions, ballets, art galleries, that, let's be honest, mostly serve the wealthy. And of course, the massive endowments for elite universities like Harvard, which, by the way, is already sitting on over $50 billion. And sometimes the methods get even more creative. Take something called the art loophole. The play is actually pretty simple. You buy a painting for, let's say, 10 grand. You hang on to it for a few years, get it reappraised for millions, and then you donate it to a museum you like. The result? You get a multi-million-dollar tax write-off for a tiny fraction of the initial cost. Pretty clever, right? Okay, so we've covered personal pet projects and we've covered political influence. But what happens when the line between charity and for-profit business just dissolves completely? What if the goal isn't influence, but just pure, old-fashioned profit? And that brings us to the latest, and maybe most concerning evolution of this trend, what you could call the philanthropy-to-profit pipeline. This is where we see the rise of the quasi-venture charity, where tax-deductible donations are basically being used as seed money for venture capital startups. And the textbook example here, of course, is OpenAI. I mean, just look at this playbook. Step 1, you launch as a noble nonprofit, all for the good of humanity. Step 2, you raise a bunch of tax-deductible money for your initial research. Step 3, you use that money to build something revolutionary, something incredibly valuable. And then, step 4, you shift gears, create a for-profit company that you control, and get ready for a massive IPO that could be worth trillions. It's a brilliant move, in a way. And if you had any doubt about this complete change in mindset, CEO Sam Altman just came right out and said it. When a shareholder got a little nervous, Altman's response wasn't about the mission. No, it was all about the money. He bluntly offered to find a buyer for the shares, including himself. The transformation from nonprofit to corporation was officially complete. So what this creates is a perfect heads I win, tails you lose situation for the donor. Think about it. If the research fails, well, the philanthropist already got their tax deduction, which is subsidized by all of us, the public. But if the research succeeds, the investor now controls a multi-billion or even trillion-dollar company. The public funds the risk. The founder reaps all the reward.
And, these kinds of clever legal workarounds aren't just in the nonprofit world. Take the Halo acquisition. Instead of a big company buying a smaller competitor and setting off all the antitrust alarm bells, they just hire all of their best talent and license their technology. It's another example of how the lines are constantly being blurred to concentrate power and wealth, both in business and, as we've been seeing, in charity.
So all of this, that concentrated power, the agenda pushing, this whole profit pipeline, it really forces us to take a step back and ask a really fundamental question about the system itself. Is this a bug, or is this actually a feature? Is this the way it was designed to work? It all kind of boils down to this one simple and maybe a little blunt question. After you see all these incredibly complex, multi-billion-dollar structures being built, at what point would it just be easier and cheaper and better for everyone to just pay the damn taxes? And that's really where this leaves us. As philanthropy starts to look more and more like venture capital, often with the exact same people running the show, we have to ask the most important question of all. When charity becomes a business, who is the real customer? Is it the public, or is it the donor?